So, have you ever really stopped to think about how you put a price tag on the power that runs an entire nation? Today, we're diving deep inside Malaysia's massive utilities industry. And let me tell you, it's a world of absolutely huge numbers, really complex rules, and decisions that, well, they affect every single one of us.
Yeah, this isn't just a picture of an iconic landmark. It really symbolizes a massive, constant flow of both energy and money. Every single drop of oil, every spark of electricity, it all has to be carefully translated into a financial report. So the real question is, how do we know those numbers are trustworthy? Well, that's exactly what we're here to figure out.
Okay, so first things first, before we can even touch the accounting, we've got to get a handle on the landscape itself. See, Malaysia's energy industry isn't some simple, open, free market. Not at all. It's more like a really complex jigsaw puzzle, right? Made up of regulated prices, national strategy, and some pretty massive government involvement.
And when I say massive, I mean wow. The scale of that involvement is absolutely staggering. Just look at this number. In 2022 alone, the government spent almost 10 times billion ringgit on electricity subsidies. Now, that's not just some random figure on a slide. It tells us a story. It says that keeping power affordable is a huge national priority and that the financial health of these companies is totally tied up with public policy. All right, to really get what's going on in this world, you have to know who the main players are. So on the board, you've got the Energy Commission. Think of them as the referee, especially for electricity pricing. Then there's the Malaysian Accounting Standards Board, or MASB. These are the folks who literally write the financial rulebook. And of course, you have the industry giants, the big ones like Tenaga Nasional Berhad and Petronas, who have to play by all these rules. So you've got all these powerful players and literally billions of dollars flying around. There has to be a common language that everyone speaks and understands, right? In the world of finance, that language is all laid out in an official rulebook. And this right here, this is the bedrock, the Malaysian Financial Reporting Standards, or MFRS for short. You can basically think of them as the grammar and the vocabulary for all financial communication in the country. The MASB issues them, and they make sure that when one company talks about profit or assets, it means the exact same thing as when another company does. It's all about consistency. And look, this isn't just some dusty textbook theory. You can see it right here in this quote from TNB's own annual report. Companies are legally and very publicly committed to following these standards. This is the absolute foundation of their financial credibility. Okay, so the rules are set. Now let's tackle the first really big challenge. These energy companies, they spend billions on massive projects. Think power plants, oil rigs. So how on earth do they decide if that money is an expense for this year or if it's an investment that's going to generate value for decades to come? It's a huge question. Well, the key is splitting spending into two different buckets. First, you've got what's called capital expenditure, or CAPEX. Think of this like buying something huge, a new power plant, for example. It's a long-term investment, so its cost gets spread out over many, many years. Then you have operating expenditure, or OPEX. This is all the day-to-day stuff like fuel and salaries. Those are treated as immediate expenses. And trust me, how a company chooses to categorize its spending can tell you a ton about its financial strategy. And this is where it gets really interesting, because even when everyone's using the same rulebook, there's still room for different strategies. Just take a look at how Petronas and Petron Malaysia handle the costs of exploration. Petronas calls it an intangible asset. They're essentially putting the potential future value of what they might find on the books. Petron Malaysia's approach, on the other hand, is a bit more focused on the physical resources themselves. Now, both ways are totally valid under the rules, but they absolutely paint a different financial picture. All right, so that's how companies account for all the money going out. But what about the money coming in? How does something as simple as you flicking on a light switch actually turn into revenue for a massive corporation? Yeah, it's definitely not as simple as just printing out a bill. The price you pay is part of this really dynamic system. First, regulators set a base price, a base tariff. But because the cost of fuel, coal and gas, is changing all the time on the global market, there's a mechanism called the ICPT that adjusts your final bill every 6 months. This basically lets the utility companies pass through those fluctuating costs without having to change the base price all the time. And here's a really cool accounting detail. For a utility company, a sale is officially made the moment you use their electricity, not when you get around to paying the bill.
They actually record that revenue the instant you flip a switch. And get this, it means they even have to estimate how much power is being used between meter readings just to keep their financial reports up to the minute and accurate. Pretty wild, right? So with all these complex rules for cost on one side and revenue on the other, how do we, the public, make sure we're getting the whole story? The entire system really only works if it's transparent. And thankfully, the standards have some pretty strict rules about what companies must show us. Let's take MFRS 6, for example. That's the specific rule for mineral exploration. It forces companies to be incredibly detailed. They can't just write down, hey, we spent a bunch of money looking for oil. No way. They have to tell us their exact accounting policies, the value of their exploration assets, and exactly how much cash is flowing in and out of these activities. In short, they have to show their work. So, why does all this complex accounting machinery really matter, especially right now? Well, because it's not just about reporting on what happened in the past anymore. These very numbers, these very rules, are now actively shaping Malaysia's big transition to a more sustainable future.
You know, there's a huge shift underway. It really started back in 2015, when sustainability reporting became mandatory for listed companies. And it's not just a requirement. Investors are now demanding strong ESG, that's environmental, social, and governance performance, not just profits. You've got pioneers like TNB creating brand new financial frameworks, specifically designed to fund their move away from fossil fuels. Green accounting, it's no longer just a footnote in the report. It's fast becoming the main headline.
And all of this really brings us to a final big picture thought. You see, the language of accounting we've been talking about, it was built for a world of tangible assets, things you can touch, like oil wells and power plants. But as value starts to shift to things like carbon credits, grid resilience, and clean energy, the rulebook itself is going to have to evolve. So the question isn't just how we account for power anymore. It's how do we account for a planet in transition?